Welcome to the night where we light up the spot. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows.
Good evening, and welcome to Markets After Dark, where we go mad on the charts right here on the Piper Academy Network, Sunday through Thursday, 11 p.m. Eastern Standard Time. I'm your host, Lunar Beaches Crypto. Tonight, same as usual, this Macro Monday, we're going to get you started off right for the week, and we're going to go over some data. We're going to have a little bit of fun. I'm going to open up with a new segment, and we'll see if you guys like it or not. So, with that said, I hope you all had an amazing, happy Easter. For those that celebrate. If not, I hope you had a great day. Hope you all had an amazing weekend as well. It was a beautiful weekend where I live, so had a great time with the family. And yeah, 5 a.m. It's time for LBC. What's up, Jesse? How you doing? So yeah, kids hunted eggs. It was lots of fun. It's good stuff. Great weekend. My Grizzlies, though, good Lord, lost by 52 points to OKC. Not good. Not good. But anyways, so yeah, we're going to go over, the macro charts, the see what's going on for the week ahead, get you prepped for success. We've got a little bit of a pump in Bitcoin. Not looking too bad. We'll get into that. And then, hey, after that, I don't know. But this pump was the best. All right, let's go ahead and bring up the Madhouse. What's going on, everybody? Hope you are doing well this evening. Hope you all had an amazing Easter weekend. And yeah, Alexandra G, good evening. How you doing? Mod Queen, thank you for being here. Jesse, good luck. Thank you. Hit that like button. Appreciate that, fam. Dylan VA, what's going on? What's going on? Kelly, what's up? What's up? How you doing? Are you going to short LBC? I don't know. Maybe. We'll see. Oh my God, Jesse, you're still up? Yep. What's going on? What's going on? Hey, Alex. I guess you're talking about Alexandra G. Oh, what's going on, everybody? Hope you are doing well. I've got a little bit of a new segment for Macro Mondays. It's just like 2 or 3 minutes. I actually don't have any clue how long it's going to take, but I decided to have some fun with ChatGPT, and I told it to create me a script for tonight's show, for a segment that has like a Daily Show type theme with Jon Stewart. And well, are you just ready? Are you ready for this? Because I'm gonna do this. We'll see. We'll see how it goes. But yeah, I decided to put a little bit of work into the show tonight for once, and yeah, we'll get it rolling here in a second. How are you all doing? Get some rest, Jesse. Jesse, don't miss the segment. Don't miss the segment. Just wait a second. I'm ready. Let's go. All right. We're going to try it out. We got the teleprompter ready to go. We'll see how this goes. All right. So, new segment. Here we go. All right. Tonight, on Markets After Dark, we dive into the economy's version of a midlife crisis. Only instead of buying a sports car, it's raising interest rates and picking fights with China. Again. Sorry. This week's economic data is serving the usual housing market anxiety. Check. Fed officials pretending they don't want to wreck the economy. Double check. And consumer sentiment, let's just say, not feeling it, fam. Now, new home sales are coming Wednesday. If they're down, that means people are scared. If they're up, that means people are still scared, but locking in 7% mortgage rates out of sheer spite. That's what's up. Then Thursday, we get durable goods orders. Think of it as a vibe check for the real economy. Are businesses buying new trucks, tools, and toys? Or are they holding off because they think Powell's about to nuke the market from orbit? Who knows? Next up, we got consumer sentiment on Friday. It's the Michigan Consumer Sentiment Index, which is basically tells us how close the average American is to snapping in a Target checkout line. Woo, that's funny. Meanwhile, in international soap opera news, Trump and Xi are apparently ghosting each other harder than your last Tinder match. Tariffs are flying again, rare earths are being hoarded, and AI chips are now a national security threat, which is bad news for Nvidia and anyone who is planning on mining crypto with a toaster. President Trump says we're winning the trade war, which, as always, is code for nobody has any idea what's happening, but we're doubling down anyway. Oh, man. So, here's the deal. If the data comes in weak, markets might rally on hopes that the Fed will chill. If the data is strong, markets might dump on fear of more rate hikes. If the Fed farts, markets will panic either way. Bitcoin's holding above 85,000, clinging to support like your one friend who still thinks Dogecoin is a long-term investment. If we crack 88,000, we might pump. But if this macro stuff hits too hard, expect a rejection that'll make prom night flashbacks resurface. Prediction time. Bitcoin, slightly bullish, but bring your stops. Indices, slightly bearish. Earnings, data, and tariffs could all sucker punch this bounce. Fed still hawkish, like your grandpa with a reverse mortgage and a grudge. So, buckle up, pour a drink, and remember, in this market, staying flat is the new winning. We'll be back after the break with a segment called CPI Can't Possibly Invest, where we ask real people if they know what inflation is. Spoiler alert, they don't. Thank you, and good night. There it is. There it is. Clip it. Clip it. What's going on, everybody? Oh, Crypto Pollo gifted a membership to All Set. What's going on? Thank you. Welcome to the alumni All Set. How you doing? Hope you guys enjoyed that whole little skit. I will try to bring a new one to you every Sunday evening. And yeah, we'll see how it goes. I thought it would be fun to do something like that. So I don't know why. I just thought it would. I was just like, what's a funny news show? Daily Show's a funny news show. Let me just put that on. What is going on? New Earth Guardian. I don't know what is going on. What's not going on? The charts. Let me get on the dark charts so I can stop hurting your eyes, okay? Because I know how you people are, all right? You people. Gosh, you people. All right. Bitcoin, not even on the screen. What are you doing? Why are you pumping? No one knows. But what we do know is that this looks hella bullish to me. This is looking hella bullish to me. Now, the question is, how far will Bitcoin go looking hella bullish? Being hella bullish. That's going to be the $100,000 question. So, as you can see, we did break the downwards trend. We got some daily candle closes and some sideways chop, sideways price action right here. Let's go ahead and mark off. Let's make this accumulation blue. There we go. Now, and we're getting a pop-up out of that range now. So that is actually first step towards bullish, towards more bullishness, okay? Next up's going to be breaking this level right here. Let me go ahead and minimize that. Let me go ahead and actually put a horizontal ray on here so we can get an actual price. So per the Bybit perpetual chart, that's $88,740. We need to get above that and close some daily candles above that, and then we can potentially see higher prices come up into this upper range in here. That's what I think, where I think we will be targeting, specifically these range highs up here. And then from there, it'll be kind of decision point for Bitcoin. If we pull from the high down to the low, go ahead and turn on our standard fib so we can see our retracement levels. Right above those highs, we do have the 786 at 102,343. So I would definitely be watching those levels. But first, we've got to break through that 88,740. Then the next stop's going to be 92,000. And then after that, we've got 96 to 97 for the golden pocket. And then after that, we've got the 786. We make it through all of these retracements. The 786, we get a close above that 786, then we are looking good. However, if we do the opposite and we come up and we start getting some rejections in here and we start looking kind of wobbly and we come down again, then we're going to just see more chop probably come to the downside and take out the low. This is my second most probable scenario. The first one is the other one that I just showed you because, like I have been saying for a while now, regardless of economic data and all of that stuff, I know it doesn't look good, but markets and Bitcoin in particular don't tend to really care about what looks good. So we still are holding our primary trend here that we have not come back down to test as of yet. We did break out of this downwards trend right here, but have gotten right back above it and have consolidated a whole week above it. And then now we're trying to get a push on this weekly candle, this new week. So let's go ahead and pull a fixed range volume profile. Let's go from the previous low to today's price action. And right there at that $96,500 mark is that point of control. We don't really have much in the way of us getting there. If we get over this hump right here, it's pretty much going to be a straight shot up to that point of control. Now, if I just go ahead and cut out everything from this range and just take this previous range, I would be more focused on this one, and it's at about $97,000. So $96,500 to $97,000 is what I believe is probably our next stop for Bitcoin. And because this is that point of control is gonna act like a magnet, and it's gonna pull that price up. Now I can also go ahead and throw a VWAP on here. We can see this is the yearly VWAP, and we have that one sitting right here at about $90,000. So if we can break above that, that would be great. Let's go ahead and turn on the upper band. For one standard deviation on that yearly, that does get us up to about $98,000. So push through that yearly VWAP, get a close above that, and then we could potentially start pushing higher and higher. I don't know what news or what anything is going to drive all of this. It could be absolutely anything. We can go ahead and take a look at gold, since we know that gold has been pumping lately. Let's go ahead and take a look over here. Gold is continuing the march higher. It looks like, yep, gold is continuing to push higher and higher. Let's go to the monthly chart so you can really get some scale on this. I'll have to bring up a different chart. There we go. And we have busted through the 2.618. That was at $3,335. We are now sitting at $3,381 for gold and pushing, continuing to push. So not really seeing much steam out of this, being let out of this just yet. This is going parabolic. This is what a parabola looks like. 4.236 sits at about $4,750 per ounce. So I do think that we will be looking for that being the top side, with the next stop being at about $4,210 per ounce. So yeah, gold continuing to climb. Meanwhile, continuing to crater since his inauguration, the dollar. And the dollar is at a major support line right now. Let's take in the candle bodies. This is the monthly chart. So if I actually just do the candle bodies, then it can actually come down lower to about 95, 96, somewhere in there. Currently, we are at prices that the dollar is at strength that it has not seen since since the first week of April 2022. So it's only been 3 years. That was the bottom of the bear market. And this was when the dollar started to push to the upside. And it's actually here, this was actually the bottom of the crypto and equities and stocks bear market. That was right before the dollar went to the downside and everything turned bullish. But if you guys have noticed, which I'm sure you have, is during this whole down slide in the dollar, our stocks have also been sliding to the downside. Now the difference is here, the S&P 500, we did come down. We did break out and back test the breakout, big sharp back test. And so we should be looking for this to potentially move higher. But we'll have to see how the month closes. That is a nice wick. And if I know anything about wicks and swing levels, such as this one right here and this one right here, pretty much all inside of this box is going to be, let me make this a brighter color so we can see it. There we go. Inside of this box is going to be trapped traders, trapped people that panic sold the bottom. What does the market do? Lock your fibs. The market likes to take people's liquidity, and they like to trap traders and then shift away from them. Let's go down to the weekly chart. So this week is pretty important for the S&P and other equity markets and stocks. We would like to see if we are going to push down, hold this low here at about 5,148 points. If we can hold that low and then shift back to the upside, what I would actually prefer to see is us to come down, for the S&P to come down, tap that low, and then come up and engulf this previous weekly candle, so we can get a nice bullish reaction off of the demand zone, and then get a sign of strength by closing above the previous weekly candle. So that is what I'll be watching for on the S&P. Let's go ahead and go over to the NASDAQ. It's going to be about the same. Came down into demand. We do have resistance up above, and we'll just have to see how this week plays out. Now, we could see equities, stocks, and all that stuff, and even crypto still remain sideways this week. Maybe we'll get some upwards price action, given that Bitcoin's been giving us some upwards price action to start the week. We'll just have to see how that goes, see if we can get some continuation out of these. So the Dow Jones, same deal, back tested to 50. I mean, same thing with all the major indices, back test to 50, get a bounce, and then hope and pray that these things can turn around and sweep the equal highs up here. The market loves to take equal highs. Big wicks are indications of trapped buyers or trapped traders. Buyers and sellers are going to be in here, okay? Because a lot of people, when they go short, you got to buy back your contracts. So essentially, if you took a short up here, then you're gonna, or anywhere in here before we got down here, you're gonna be buying back lower, and that's how you make money, is on the difference. So, but you're also going to have sellers down here because you break this level here, you break this level here, and you have breakout traders going and selling. And then they get trapped into their trades as price pushes back away from them. So you get all of that liquidity all at one level. You got people aiming for profits at the lows, and then you have people aiming to short on the breakouts, and then you also have people looking to buy at the lows. So we know that that's where the liquidity is going to reside, is below all of these lows. So whether it's stop losses or limit orders or what have you, or just liquidations, trapped traders are all down in here. So let's take a look at the Russell 2000, see how we're looking over here. Still has not taken out the equal lows nor the equal highs, but it is closer to those equal lows than it is the highs. I could see the Russell do another move to the downside. I still kind of expect things to make another move to the downside before they can really get rolling, but we'll have to see. But the Russell 2000, this is going to be your risk on stocks. So it's 2,000 of your small market cap stocks, which means they're riskier assets, which is why ever since we've gone into this whole trade war thing and all that stuff, we've just been seeing a massive decline. Now, right now, what I'm seeing in here kind of resembles potentially a 1, 2, 3, 4, and 5 wave crashing structure. Sometimes you can get a wave 6 and a wave 7. So I would just be mindful of that. Or this could have been 3. This was just a little pit stop in the middle of the 3rd wave. Pullback, 5th wave to the downside. 5 wave crashing structure. So it's either 5 or 7. Sometimes, rarely, but sometimes 9. But those are your corrections. This is your 3, 5s, and 9s. Same with your trending to the upside. These are, as long as it is impulsive, meaning quick, energetic moves, then those are the ones that you're wanting. I mean, you count the waves regardless, but when you're moving up real quickly, you're trying to count those waves. When you're moving down real quickly, you want to count those waves. Moving sideways, it's really difficult to count those waves. So anyways, liquidity moves happen within market structure. It's more than a weekend false move. We've clearly broken market structure out of the downwards channel. Yep, that's what I was talking about earlier. We'll bring Bitcoin back up in just a second. Just kind of want to go over a little bit of a little bit of everything else first. We do have these reversals again here on the total crypto market cap. Let's go to the weekly. Yep, so we have the reversal signals coming in here. We have the hidden bullish divergence coming in here with our oscillator putting in a lower low and our price putting in a higher low in here. So that gives us our hidden bullish divergence. And now we're just trying to get that push it real good. Push it real good. All right, so here we have a little bit of a bullish divergence as well on the total two. So this is going to be your altcoin market cap. Looking at our altcoins, we need to also think about our Bitcoin dominance that is continuing to push to the upside, even as of now. So Bitcoin dominance pushing to the upside. Let's take a look at our USDT dominance. USDT dominance still sitting within this range, putting in those equal lows. We'll see what it likes to do. If this starts to break down, which we are getting some reversal signals in here and bearish divergences here on the weekly chart. So that's pretty significant. So we could see it start to push down. We do have this previous consolidation range in here. That is clearly an area for demand on our USDT. However, with all of these lows in here, now it's not like you're trading a crypto or a stock, so we'll see if it actually follows market structure as it should, which means it should push to the downside, which means people are leaving their USDT, they're using their USDT and buying assets. They're buying crypto, your risk on assets. So that's what we want to see if we want that to be strong. Ethereum, hashtag FETH. Now, this one right here is actually pretty good. As we can see, on the weekly chart, we did break the swing low down here. We have since reclaimed it. Last week was a consolidation week on top of it, and we have not closed in a low below it. So Ethereum is just kind of, I don't even know, man. This thing looks so dead. My uncle, who just got into crypto some few months ago, was talking to me about Ethereum today, telling me how he thinks it's dead. No one's going to use it. And for me, buy signal. Buy signal. Sitting here at the point of control from low to previous or to current price action. We'll see how it goes. We do have a volume crest at about $1,887. So we want to watch that level right there on that volume crest. I don't think ETH is dead at all. I just think that it got hit with ETFs. And that's another thing. My uncle was talking about these ETFs. What did he just said? Buy ETH. OM tanking may hit a lower low. Let's see. I missed the short, but it looks like it hit a lower low. Oof. Again, more lows. That's not good. New Earth Guardian, Ethereum, yeah, FETH. So yeah, we'll see. We'll see. But he was so he tried to argue with me. Maybe not argue. Maybe a little bit of a disagreement on market cap, and he tried to tell me how market cap doesn't matter. And I was just wanting to just market cap. It's not everything, but I know it's just price times circulating supply. That's your market cap. That's all it is. However, your fully diluted value of your market cap matters, because that says how much money is actually in the network. I'm just saying. I'm not a pro, but is it because ETH moved to proof of stake over proof of work? I mean, honestly, when it comes, I don't know, man. I don't know why Ethereum has had such a rough go about it, to be perfectly honest. However, I mean, if we do look at the ETH BTC chart, I mean, as Benjamin Cowan says, it just had to go home. It just had to go home. This was September 2019. This was May 2021. This was December 2021. This is the peak of the market. Had to come all the way back here before it could expand away from Bitcoin. Potentially. And if we look at our Bitcoin dominance is getting very close to where we were last cycle prior to altcoin season or whatever. More bullish market for altcoins than for Bitcoin is all that represents. So as Bitcoin gets closer and closer to those highs and Ethereum has taken out these lows, and if Ethereum can just consolidate or maybe even start pushing against Bitcoin a little bit, reclaim this range 2000, then we could see this thing really take off. We could see the profits. I think maybe we could be looking at gold profits rotating into crypto. Who's been buying a ton of gold? Does anybody know? That's right, communist China. China's been buying a ton of gold, or shall I say 50 tons of gold at least. I think that was just one purchase, but they have garnered a lot of gold, okay? They're part of the reason why gold has been pumping, but they bought a lot. They've been buying for a while, and probably because they knew their economy was trash and their demographics are trash. So it's not looking good for China, but we'll see. We'll see. All right, but yeah, Ethereum. So like I was saying, I could definitely see China, especially with how involved that they have been in Bitcoin, with Bitcoin in the past. I think that we could see China rotating profits from gold or selling their gold and rotating the profits into Bitcoin and other riskier assets because they know that people in America still have money and that they're going to be buying this stuff. They also know, maybe potentially, and I think all the big players might understand this, is that people, and I've been trying to put this thought into Piper's head, although I'm not sure he's picked up on it yet, and I don't think he really cares, but we'll see. But I think that we still have one last hurrah, and that could last a couple of months. I don't know. We could stagnate for the summer and then not pop off until later in the year. Not entirely sure on timing. Timing isn't really of my concern. My thing is, if an economy, so we have a low unemployment rate, okay? Labor market is still relatively solid, okay? Labor market's still relatively solid. We do have wages coming back down to more of an equilibrium. They were kind of pushing a little bit high for a year or two on the wages, which, in my opinion, they still need to keep going up. But anyways, that's a story for a whole other day. Not really a story, but whatever. That's a whole other stream. People can start to see the writing on the wall, or maybe people get fearful, or maybe we get an end to a trade war, and that just unlocks all the risk, Okay, and then we get interest rate cuts, and all this stuff happens all around the same time, and it just gets people super bullish, so they start putting all their money into crypto and risk on assets and into this and into that, whatever. Part of me thinks tinfoil hat time. Here comes the tinfoil hat time. Okay, tinfoil hat time. All of the major players, central banks, the governments, the elitists, all around the world tanked the markets so that they could buy in lower, pump the price up so that they can sell it all to you before the real crash comes in. My thing with what's going on today compared to 2008, which crypto, Bitcoin, has never seen a 2008 style crisis. It emerged out of that crisis. The difference for me, I'll have to do some actual more like research into this, but it seems to me like there's way more fear in the market at this time than there was before the crash in '08. Meaning '08 wasn't even really telegraphed like we are having right now. And with me, I'm really big on like just kind of busting narratives and trying to figure out, all right, is this narrative that they're pushing on us right now, is this them being truthful, or are they trying to manipulate the psychology of retail into selling everything to them? Maybe. So that's why I just kind of, why I don't really, wait, did Army Piper show up? I don't see him anywhere. I've seen it, Army Piper. They're so fearful. Yeah, exactly. And that's the thing, like, people are so fearful right now. And I don't recall. I remember 2008 being super sudden. Like, it wasn't like, I know there was like Ron Paul and like two other people talking about how the housing market's a bubble, guys. The housing market's a bubble. But like nobody was paying attention. But also don't think Ron Paul knew like how bad the underlying assets were, the subprime mortgages, and how they were stacking them and repackaging these useless, just no value whatsoever subprime mortgages, and just kept packaging them and reselling them as if they had any value whatsoever. We're going through a massive trade war. Bitcoin is back above $87,000 and holding. Now, like I keep saying, Bitcoin has work to do. Crypto has work to do before we can get like super bullish again. But we'll see 75K on or near May 5th through the 13th. And why, stupid Bitcoin? Stupid Bitcoin. What's going on, Carlos? What up, stupid Bitcoin? Seeing Stroman. What's going on, Stroman? And stupid Bitcoin. RS Miller, what's going on, RS Miller? How are you doing, sir? Now it's just a scalping pump and dump, hence the volatility. Yep. So yeah, basically, tinfoil hat is they crash the market on purpose, get you as fearful as possible so that they can buy cheaper, because none of these guys had any idea that, except for maybe the banks at some point, but none of these banks or big institutions had any idea that what was going on with the housing market in 2008. It just kind of fell apart. Nobody was talking like super bearish or anything like that. Not from what I've seen. I'll go back and do my research, do my due diligence, look at some headlines, ask ChatGPT, hey, how are we looking in 2008? You know, whatever it is, and we'll see. We'll see. Like, were they telegraphing? But because they do it a lot, man. They do it a lot. Jim Cramer is a perfect example. Says, hey, buy Netflix, or Netflix is a great buy, and then like the next day it plummets. Why is that? It's so weird. I'm with Lunar. Housing is so stupid. The cost of a house in South Florida is crazy. Yeah. How low will they push BTC down? I don't know. It depends on if the bottom's in or not. So, fun fact, I did point this out several months ago. I believe it was prior to the 2024 election, which would have been this week right here. Okay, right here. We're going to mark that off. If you go back in history, I can't do, let's just do, what was 2020? No. Yeah, 2020. Yeah, it happened in 2020. That's when I'm not even on the right chart for this, or on a good enough chart for this. I need his story. His story. All right. All right, this was a joke. Don't look at this. That was a joke. Showed you guys that. If you're new here, that was a joke. So yeah. There's that level there. And in November of 2020, first week of November 2020, right there. 2016, first week of November in 2016, right there. 2012, first week of November 2012, right here, right there. And then 2008, I mean, we don't have that much, but what did I just mark off? What is the first week of November? The first week of November, every 4 years, is a U.S. presidential election. Bitcoin, in its entire history, has never gone back and crossed the low of the week of the presidential election. Never done it. Right now, that last presidential election sits at $66,824. That low of that week. So, right now, it's kind of holding. We're kind of pushing to the upside a little bit. Chart Prime segment time. Let's go. We are having the green candles. We are all green on our static still here on the weekly. So the weekly is not telling us to sell just yet. 3-day. Have we turned, or are we still green on our 3-day? We're still green on our 3-day. Have we turned green on our daily yet? I'm going to guess nope. If this comes up and this closes above here, we might get a green candle here on the daily for the Market Oracle Pro Plus. Shout out to Chart Prime, bringing all the flavor with the Chart Prime indicator package. Get 45% off your first month. Link in the description down below. We are sitting at that dynamic reactor, so we get a push above that dynamic reactor. Today, we might turn this red candle into a green candle. So we want to get above that. Again, we want to get above this high. We want to get above that dynamic reactor. And then what I would prefer to see is for price to come back down to the dynamic reactor and this upper resistance and flip that into support. That is what I would like to see. I would like to see us to break that with some conviction and then flip that into support. conviction, and then we could even do a slow draw down the downside, and we could even go sideways even more before we continue to the upside. This would actually be healthier, but that might not be what we get because people be short, so price might get moving quicker than everyone anticipates. But big week this week. We could be seeing that cross above the dynamic reactor, flipping it green, flipping the static candles green, and then potentially getting us, let's see if we've already got a buy signal in here. Let's turn this on. See if we got a buy in here. Nope, no buy signal yet, at least on the daily chart. We've come down to the 12-hour. Are we starting to get any buy signals yet on the 12-hour? No buy signals yet on the 12-hour, but we have crossed above the dynamic react. Now, I know on the 4-hour, we consolidated all last week on top of the dynamic reactor. Our candles are nice and green, pushing to the upside. 4-hour kills it here for the chart prime indicator. I love that chart prime 4-hour chart. On the 4-hour chart, we did get a strong buy here, strong buy signal here. And if you would have just bought that strong buy, you'd be up pretty nicely. And it already gave one take profit after that strong buy, one take profit, and then nice consolidation. And then you get the breakout and you get a second take profit. So now the next level is going to be this high and then this high. Well, basically both of these highs. And we want to see those get taken out before we can even think about this maybe continuing to the upside. For now, we want to be cautious because we do have a bunch of lows in here, which means we do have liquidity resting below here. So we've got to be careful that we don't get one of these before we continue to move up and then we roll on over. So like I've been saying, we are not out of the woods just yet. So head on a swivel. But if we can start to see, if we can get that 12-hour to flip green, and if we can get that daily to flip green, then we will be looking a lot better. Now, bringing up our Prime Oscillator Pro Plus, we can see that we have been very slim in the red. Now, we get pretty slim in the green too during all this move, so not really much to write home about on that point. But we are above the zero line on our trend fusion, or it's like the trend ribbon. And our true 7 is pointing above the zero line, so that is good. True 7 is just 7 indicators all rolled up into one. I got rid of a lot of the noise. For me, it is noise on these, but if we can start to see some green start to really increase in here, like we did in here on our true 7, like we did in here on our true 7. Really, we started stacking green columns prior to the big move to the upside, so that's something that I would prefer to see, is kind of start stacking and racking, stacking the sats and racking the racks. Yeah, I don't know. So yeah, all right, so let's zoom on out to the monthly, get into some smart money concepts in here before we start this off. What is going on, Crypto Sammy? Hope you are doing well. So smart money concepts. So first of all, first thing, lows and highs. This is what we look at. Previous candle lows and highs, particularly on higher time frames. We're gonna start off here on the 3-month on the higher time frames. So 3-month, move that over. 3-month. This was the previous. This is the wait a minute. Oh yeah, previous quarter. So previous quarter. What do we do to start this quarter? We came down. We swept the low. We're pushing away. That should, if we can get above the midpoint of this, I would say this whole candle, which is going to be $93,000, we can get above that and get a nice candle body close above that on this quarterly. I don't know that we're really looking at the quarterly right now, because this could continue to push higher. The main thing to take note is that we did come down, we did sweep the low of the previous quarter, and we also came down into this fair value gap and started to push away. So we want to maintain that energy. Bring it on down to the monthly chart. Now on the monthly, I have been pointing out this breaker. Now we have not come down to test that monthly breaker, so that is something to keep in mind. However, we did come in and fill most of this monthly fair value gap, and now we just want to really see, we want April to close, in my opinion, above that $92,000 mark. We can get April to close above 92,000, then I think we will be looking for higher prices in the future. And so I'm just not ready to call bear market yet, because right now, technically, by smart money concepts or ICT concepts, whatever you want to call it, however you view it, we are still in bullish order flow. We are still in bullish order flow. So especially if we get a bounce to the upside. Now, if we get that move to the upside in April, and then we come down and we sweep all that and we close below that, the April low, then watch out. Watch out. Things are not looking so peachy at that point. Coming down to the weekly chart. Let's go ahead and remove all of this. You see the sweep. All right. Now, previous week, no sweep. No sweep of the low anyway. Now we've come up and we've taken the high, but we've taken the high fairly aggressively. Now, I think how the rest of this week plays out is all going to depend on how this day finishes up. Okay, so we want to watch this daily candle. If we can continue a nice big bullish candle like this and close the candle towards the high, I think that would be much more bullish than if this thing started to come back down and showed some weakness and put in a big wick. Now, Tuesday will likely be the big test, the bigger test, as Tuesday could be. So let's say we closed, let's say we come up a little bit higher, and then we close up here, 88K or so, and then we pull back on Tuesday. We would want to see Tuesday hold this level, maybe not necessarily that level, but there is. Go down to a smaller time frame. Let's go down to the 4 hour. Let's see, maybe 12. So the 12 hour could give us a fair value gap once it closes. So we're on our first 12 hour candle of the day. The second 12 hour candle could get us up to maybe even sweep that high. And then we'll have to see what Tuesday does. Tuesday does like to give us reversals, but if we can just reverse but kind of consolidate throughout maybe even the rest of the week and maybe even push higher on Friday, then I think next week will be a very explosive week. So get the initial push this week, maybe consolidate, and then really burst out next week. If that doesn't happen and we start meeting some resistance and coming back down, then at the very least, we're going to be chilling out in here for a little longer. So at the very least, if not just straight up rolling over, taking out these lows. Now, we don't have to do that, but that is what that's what I'd be watching for this week. Now, as far as daily trades go, I mean, we're just gonna have to. I gotta wait for stuff to play out. I will be looking. We've already taken the previous day high, so that is going to be the first major level. Let's go ahead and turn on Spaceman. We've got the previous week high here, previous month midpoint. I don't know why all of these aren't the same color. Global color, gray, light gray. There we go. So yeah, previous week high. Now, if we can come down, I'd be looking tomorrow to see if we come down to that previous week high and get maybe even sweep it, but then put in a market structure shift off of that, and then I would probably go long and just aim for higher for now, because to me this looks like maybe a 1, 2, 3, 4, and then 5 with a high. Monday sometimes we'll put in the high. Let's see, where's Tuesday? Let's just start at 12 a.m. and make that white. There we go. So we got a long ways away until Tuesday. So push a little bit higher on Monday, come down, sweep lows, and then kind of chill out. Come down, sweep the Monday low, and then Tuesday can continue the move. Something like that would be very, very nice. Now, the reason why I think we could come down in here is because we have all of this liquidity in here that we just created off of this big push. So be watching for potential overnight moves to the upside that are kind of sketch. It's kind of like just barely putting in higher lows and higher highs. Market opens tomorrow. Let's see, where's the open? Market opens. We go 9:30 right here. We push up, and then we come down. Potentially test that previous monthly midpoint and get a bounce from there. Either way, I'll be waiting to see if for Bitcoin to take out either of any of these levels in here: previous day high, previous week high, previous month midpoint. And that is from one of those levels is where I'll be looking. Either of those levels is where I'll be looking for that shift in market structure and a change in the state of delivery. Now, if you're looking for a change in the state of delivery, what you're wanting to look for, what you're wanting to see, is for the candles to change how price is being delivered. And you have to turn off your wicks to be able to see it. You got to turn off the wicks, because the bodies tell the story. The wicks do the damage. The bodies tell the story. So the bodies, once we started coming down here, what do we notice? We start to notice, all right, we're getting a little bit weak on our selling, but we do have one more push down, and then we start getting multiple green candles in a row, taking back all these losses in here. Then we get a consolidation, and then another break up to the upside, consolidation, breakdown, trap traders, and then a push away. And then we get that move down, kind of looking like what I was just showing you with today's price action, or potentially for tomorrow's price action. And then you start to move to the upside. But the main thing is we start seeing way more green candles, and we see price coming down into bullish candles and reacting positively off of that. So that is going to be a way for you to spot change in the state of delivery. Another way is just taking out highs and closing above previous highs, closing above previous highs, closing above previous highs that were being put in on the downtrend. You close above that, you're bullish. You're bullish. Then you come down, close below here, get a retrace into a big bearish candle. So big displacement down, big push down. Mark that off. That's going to be a level for potential sell opportunity. Sure enough, you get kind of a head and shoulders in here, and then you get the big break. Once you get the big break after coming into an area of liquidity, for me, that is where I go short, put my stop at the high, and then aim for the next level of liquidity. Now you can see that the candles actually came all the way down here and took out, but still held above the wicks over here. Yep, still held above these wicks, but the wicks are what held up the price. But we see big moves to the downside. Then all of a sudden we get a change in how, the market is delivering price. We get a change from big push down to big push to the upside. This is technically a change of character. And then you come up, you get the internal breakout. You do sweep this high up here. You get trapped traders up in here by coming up in here, sweeping this high right here. You just come up, you sweep that high. So up in here, you get trapped longs, okay? So price starts to push away from them. What do? What do the trap longs do? They got to sell. What happens? They sell and the market makers buy. So the market makers punish them for going long too early, getting them trapped. They push the price down. Sellers or buyers either get stopped out, or buyers either get stopped out. Then you have the people that went short because they saw the break, but they didn't get the close above. So you have people that go short, which means they're what? They're selling. So you get two sellers down here in this zone for market makers to buy from. And then so they buy, and then the price skyrockets. So you just got to you got to pay attention. You got to know what the market maker, how the market makers are thinking, why they are doing, what is the logic behind what they're doing. They're just chasing the liquidity. That's all that they're doing. So anyways, it's the top of the hour. That's going to be it for Macro Monday. I do appreciate each and every single one of you for joining me. I hope you enjoyed the little skit at the beginning. Let me know what you think in the comments section down below. Put a 1 in chat if you witnessed it and you liked it. Put a 1 in chat if you witnessed it, or a 2 in chat if you witnessed it and you were kind of like meh. And yeah, that's about it. So this is a bad time to short. Yeah, I wouldn't short right now. No. I mean, we are at the highs. We are at highs. But I mean, I don't know. I'm not gonna short. See, I don't know where you are, Kelly. I don't know if you're across the pond or not. So you'll be able to watch price action. 111. All right, everybody that caught it liked it. So we'll do it again next week. Let's see if I can remember. Let's see. Let's go back to the chart real quick. I do want to show you guys this because this is pretty cool how I've got this set up now. All right. Go ahead and just get rid of spaceman. We're not going to worry about those levels. I've got this set up differently than how I have had it set up. So if you want to get this indicator, ICT kill zone sessions and indices by Vince FX, get that indicator, take a screenshot of what I have clicked, what I don't, and all of that stuff. Change the times on here. Change the times. Click this. Unclick that. Change your times. Put in this CBDR. Don't worry about what CBDR means. Just know that you want this level. You want your New York Open, your 930. I got rid of the 830, unnecessary. 830, got rid of that New York Open 9:30 p.m. algo session start, which is at 1:30 in the last hour of the day. There are 90-minute cycles. We're not going to do that today or probably ever, and that's going to be it. But essentially what that does is that is what is going to mark out all of these sessions, and this is how I am going to start trading from. This is what I'm going to start doing. So coming into market open 9:30 right here. Of course, I'm gonna have to change it because I'm on a white display or black background, black canvas. Go ahead and change that to white. Change this to white. Change this to white. There we go. Change this to white. Change this to white. There we go. All right. So there's our 9:30 open. Now, pre-market, what do we have going on? We have London taking out the Asia high, but we have Asia and London lows below us. This is pre-market. Market opens up, we push down, and then we come back up into this order block. We kind of go sideways, then we get a big displacement to the downside. Now this big displacement is where I personally would consider on that close taking a short, and then I would just aim for the previous session lows. Take that short. It's almost a 2-to-1 trade. By the time you start pushing down, you can start moving that stop and shifting that stop lower and lower and lower, and then look for a reversal once you take out the lows. Once you take out the lows, you do get a little bit of a reversal. Now, I like to start the day off on the 1 hour, or on the 1 minute rather. Let me see, where's the one that we were just at? Guess it doesn't really matter. Same either way. Just want to go, all right, this is the one we were at, yep. So we know we have taken the Asia high with London. We know that pre-New York stalled at the London high and started to push lower. Then we get displacement on market open. We do displace lower than this low here. And then we continue lower here. And at this point, we're just looking for a pullback for us to short from. Now you could also wait for the big break, which happens here. That gets us below this low over here. And then from there, we can go ahead and just take a short, put our stop just above there's a fair value gap in here. So just above that fair value gap. And then it's not until this candle right here that we push up a nice big candle right there. We get that big push up through there, and then we create a fair value gap on that candle. And then from that fair value gap is where you could consider taking a long. So context, we swept the previous session lows. We've got the big reaction off of that. This is on the 1 minute. But the big reaction off of that, we do create some fair value gaps in here, but we haven't taken out any internal range highs until we break up really here. This is the first one, but this is the last high before we moved to the downside. And so that's the one where I'm looking to enter from, especially if it lines up with a fair value gap. And then from there, you just go long and you aim for the session highs, maybe the previous London high. I would aim for highs up in here, and I'd keep my stop down here. Actually, I'd aim for that New York session high, so you have a better risk to reward. Now, once you come up and you break these highs, we can now move our stop loss to this low or at break even. Take a little bit off the table if you want, but we are aiming for that upper session. That's what we're aiming for. Now, once we break above that session, that is when we can move our stop loss to this previous low here. And then once we break above that, now we can get a little bit tighter on our stop. So we break above this high here, and that is when I will put my stop loss down here. And then it's pretty much at my original target. And each time we put in a new high and create a new low, you just keep moving that stop loss. Come down, you don't create a new high, and this actually ends up being where you get stopped out if you don't already just close the trade once you see the displacement to the downside. So either way, if you want to keep it real easy, this is the easy trade here, from here to here. That's the easy one. Or if you want to try to go for that London high, which we do have some equal highs up here and some liquidity up here. So Not really surprising that we did come up and we did take out that London high. So, and market structure did remain bullish. I mean, we did get a big displacement candle down, and this one did too. Then we started to consolidate, and actually CBDR. Now the whole point of all of this is, what am I looking for? I'm looking for a sweep of the previous session. So we got a sweep of this previous session coming down here, and then I'll look for a shift in market structure. We got the shift in market structure here, and then we aim for liquidity pools to the upside, fair value gaps, order blocks, what have you. Whatever the levels are, that's what you're looking for. All right, so whatever those levels are when they come in, I'll be sharing them in the Discords, in my Discord, and Alexo's Discord, and the Piper Academy Discord, which is pinned in the chat above. Don't forget to join the Piper Academy Discord. That link is right there. So join today, join the Piper Academy, and get you all the sauce, get you all the alpha. Come in there, ask questions, and yeah, that's it. That's it, guys. So the main thing is watching for the levels, wait for the levels to get swept, look for a shift in market structure. If you don't get a shift in market structure, then consider flipping your bias the other way and get ready for continuation. Okay, so we don't want to be stuck in one bias for a day. If you're coming in thinking I just want to short without playing what the market gives you, and it goes long, you're just not going to have a good day. So be flexible, be adaptive. If you are a scalper, a sniper, a trader, an intraday trader, just be careful, manage your risk, and follow the trend. But yep, that's going to be it for me, guys. I do hope you all have well, an amazing week ahead, first of all. Second of all, we'll have the shows back tomorrow, I do believe. We'll have Good Morning Crypto with BC Port Corp, maybe. We'll see. And then we'll have the morning market report with the OC guy and the Army Piper. And then we'll have trading with OC at 8 p.m. Then we'll be right back here for another episode of Markets After Dark, where we go mad on the charts. Thank you all for being here. I hope you all have an amazing, beautiful, wonderful, radical sleep. And I will catch you all tomorrow. Mad love. Peace out. Later. Bye. Good night.
Welcome to the night where we light up the spot. We're trading crypto, find out you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, I shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trend, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark, where only brilliant shows. Hit that subscribe and join the ride. In the world of finance, where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide. Lunar's bright light. Crypto markets soaring through the night. From big dome markets soaring fast. Markets after dark touch shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trend, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp our knowledge be shown. Let Lunar Beaches guide you to the law.